In this video, we're going to look at 3 hot Aussie stocks to place on your watch list for July 2020. Now, we don't just want to stop there. We want to know when we can buy these stocks, when we should look to take profits, and when we should get out of these stocks in case they go against us. On top of looking at these 3 Aussie stocks to add to your watch list, we want to give 3 steps to improve your success rate. The first being reducing the noise around looking at all of these stocks online. The second being looking at actionable steps on where to buy and sell. And the third is looking at some basic technical analysis to understand how to implement these steps. If you like the sound of that, consider subscribing to the channel and liking the video down below. I post videos like this every single week, so it'd be lovely if you guys could join us for the ride. Now, without further ado, let's jump into these stocks. Now, where do we usually start? We usually start with diving into YouTube and asking it stocks to buy in July 2020. And of course, we get quite a few videos come up here. So like I said, in the first step, we want to try and reduce the noise that's out here. And how do I do that? I generally find 1, 2, maybe 3 different people that I tend to follow on a regular basis. And how do I determine who I want to follow? I do that by looking back at their history. So going back a few months, maybe a few years if they have that on their channel, and seeing how their picks have turned out. I'm looking at here, I can see Justin Baldori come up. A good friend of mine, so I'm going to disclose that. A friend of mine from Melbourne, he also does a lot of fundamental information when it comes to stocks, whereas I look at technical analysis. So I think this is a great partnership here. He gives me the know-how about the business, and then I can go away and look at the chart to figure out where I think good buy, sell, and take profit targets are, which is what we're going to discuss in today's video. So let's have a look at a couple of Justin's videos here in regards to the 3 stocks we're looking at, and then we're going to add in one more stock pick from a different channel to add into the mix and just look at where we can buy and sell these. Now, going on to step 2, we want to give ourselves the best success rate of growing our portfolio, getting out of our grind, and living that financial freedom lifestyle. So for step 2, we have to look at some of our portfolio rules, our money management, and then on to step 3, we're going to look at some trading rules. There are of course a lot of rules that we can add in to improve our success for our money management and our portfolio in order to grow that nice capital base so that it starts producing us income every month for us to leave our jobs or go and do something we love to do. Maybe it's travel. But I'm not going to go through every single one of them. I'm just going to add in 1 or 2 here, and then I'm going to add a few throughout the videos that come up. So be sure to subscribe to the channel. Stay tuned for that so you can continue to build your portfolio plan. Today, I'm going to look at rule number 7 here, and then this is from Gann's rules, traderslog.com, Gann's rules. You can find this through any of W.D. Gann's rules. Now, he was an old school trader from the early 1900s, died in 1955. I'm not going to dive into him here. Go and do your research on him. You'll find some really excellent information and some super cheap books that you can start looking at now to understand how to build your portfolio. Looking at it here, rule 7 is margin. And I think this is probably a great one to bring up early on in the piece because it really helps you set your limits. Now, a lot of traders, especially in the new days, I know I did it as well, you can just get into positions without setting your stops, not understanding what your money management is. How much money should I put into a stock? Now, we can look at all of these videos and say, look, there are some great stocks to buy out there, but how do you really know how much to put into any one stock? It's going to vary across the board. Looking at this one simple rule here, Gann just talks about having no more than 10% of your capital in one particular stock. Now, you can make that 3% or 4%. You're going to have to change that up to suit you, which is another bit of information, another bit of research you should do. But let's talk about it just for this video. 10% of your capital, because then that means you can only have a maximum of 10 stocks in your trading portfolio. If you've only got 10%, then 10 times 10 is 100%. That is going to limit us and reduce the noise, which is our step 1 of our trading plan. We want to reduce the noise. We want to be able to have the most success within our portfolio. So let's leave that at success step number 2 and dive into number 3 and looking at areas that we can buy, sell, and take profit from in our stocks. So the 3 stocks we're going to look at today is 1 is ZipPay, 2 is REA, which is realestate.com.au, and number 3 is EML. The first 2 stocks, you can look at fundamental information online on YouTube. Like I've got here, you can see it on Justin Baldori's site. He has Zip and also REI. And then for EML, I'm looking at another channel here from Kenjo Boo. Now let's look at the charts for Zip, and I'm going to try and keep this as simple as possible, just using a couple of indicators, something really simple that you could possibly pick up and see for yourself. So this is the chart for the last approximately 12 months of Zip. All I'm going to use here are some fibs, and we're going to stick this to the bottom of the previous crash, and that was the coronavirus crash. And this is the current top that we can see on Zip. Now, all I'm doing here is using the Fibonacci numbers, and you can check these out again online. Use something like Investopedia if you don't understand what these are, but essentially we're just looking for a 50% retracement in price. Now, we think that this could be the top. None of this is certain. Whenever we talk about technical analysis, none of it is 100% certain. We're just looking for probabilities of where we could expect the price to end up and where might be a good place to put a buy or a stop order. Basically a stop price in case the trade goes against us. Now we do want to do some sort of long-term investing here, so let's just take that in consideration as well. I'm just looking for good areas that I think the price might come back to for an area to place my buy order. You know, I've got 10% of my account to buy now. I'm thinking, okay, let's start with $1,000 just for argument's sake. So we want to get $100 worth of Zip. Now for the 50%, we can see here that it comes in at around $4, and that is in this area here, which is basically called a gap. And there is a probability of the market coming back to fill these gaps now that it has possibly found a high. So I like that. That's my first reason for a technical analysis trade on setting a buy order here in Zip rather than just buying it at its current price of $5.75. There's my first one, $4. Now my second tool here is simple trend line. I'm going to stick that from the bottom up to this previous low here, and you can pretty much use any of the lows and you'll see that it won't actually line up, but I'm using something that the market has already provided, and that's the data that I can see here. Firstly, we can see that the market has liked to test that area here even before this area was put in. Now it's anchored at this point here. It's almost come back to test it, but it's showed a sign of strength and pushed away. So what I'm looking at here is if the market comes back to this line and it breaks through it, I see that as a sign of weakness, and we could possibly see it come back to the 50%, if not the 38%. So that's where I like that area as well, around that $3.30. Now my last area for choosing that $4 area is the previous high. This was before the coronavirus crash, and Zip actually put in a high late last year. Coming into February, where the rest of the market topped, it didn't make another top, it made a lower top, which shows that there was weakness in Zip before the overall market had weakness. Now, at the moment, the market is struggling to keep its price above the previous top. Now, I'm just going to raise it up just a little bit where the previous top was at around $5.86. So that is, again, a potential sign of weakness, and another reason why I like the 50% zone. And I didn't mention earlier, but essentially the 50% is a good balancing point for the market. If you go and lay this tool over many other stocks, you can often see that the market comes back to a 50% point. An awesome case, an example, is looking at the Dow Jones index. If you lay this tool over the 2009 bottom to the 2020 top, you can see that the market smack bang hit on 50%, more or less by a few points. But in a grand scale of 11 years, the market came back to 50% on a scare crash. I think that's pretty amazing. Again, we're technical analysis. We're not looking into the fundamentals at this point. We've already done that little bit of research in terms of what the company is. Now, the last thing I want to look at here is the volume. And we can see that this area right down here is very high volume. And that coincides with these bars pushing up. And now I like to read this in a way that there was a lot of volume to push the market higher. But what happened straight after that? Not much. The market failed to go higher and the volume actually began to decrease on these bars. So for me, I see that as a slight sign of weakness. And over the course of the coming days, it was about 9 days consecutively heading down with a small bounce, and with that bounce was not much volume. So I see that as a sign of weakness. I could be wrong, but at this point, I'm just holding out, and if this low breaks here, then that is going to confirm to me that it was a sign of weakness. And that's another reason why I like this area of $4 to get into the market. And of course, $4 also lines up with some of the old highs. So for Zip, I like the area to buy it at around $4. And for me, that's probably saving close to 30-ish% from where it is now. If I happen to be wrong on this and the market goes straight up from this point, that's something that I'm prepared to take, and I just miss out on buying Zip at this point. There'll be a chance in the future, but for now, I think it could come back a little bit. In terms of a stop loss area where I just want to sell the stock no matter what, if that is your plan, otherwise you're just prepared to hold it no matter what, and for the next 5-10 years. But I would be looking at an area somewhere around that $2.60 because it break past some of these other lows where it had support. So if it did begin to break around $2.60, that's probably a really conservative area to get out. I'm sure a lot of other people would probably have their stops somewhere around this dollar area, but that's losing a lot of the value if you had bought it at $4. So for me, I'd be looking at some of these other low points, which happen to sit around this point here between $1.50 and $2, and previous to that, around this area here of around $2.60. Now, lastly, as a take profit area for this, you could be on a time-based scale. You say, maybe I want to hold this for 3 years, 5 years, whatever it may be. Or you could say, look, I'm looking to buy it at $4 and I'm wanting to make 3 times my money. I want to sell this when this goes to $12 a share. That's going to be up to you to how you set that into your plan. But they're just 2 ideas of how to exit in the case of buying the stock at $4 because we've done our technical analysis on where might be a good place to buy the stock. Now, I know that went for a little bit longer than I had anticipated, but with that information, I'll make the next 2 a lot quicker and I won't explain how all of these technical analysis tools work. I'll just lay them on and give the price areas. So our second stock is realestate.com.au. It's the Australian site that we all go to look for rentals and purchasing property. Now, like I said, these are just the technicals that I'm going to lay on. Firstly, I can see this trend line here and I look at it kind of like a grind line. The market has been grinding higher on this and the anchor points are basically the low and the first higher low. And you can see it's come back, tested it, almost bounced away, and now it's starting to test it and fall under. So if I see that break through, that's my first sign that this market could be weak. Let's lay over the Fibonacci, anchoring it to the bottom and the top, and giving us a price point of where the market may come back to. Us knowing that 50% might be the area. There's another congestion of highs at its 50% point, which is amazing, $87. Currently it's sitting at $109. So if we get a fall back to $87, I think that's a great place to buy. Now, a conservative entry would be at 61.8%, which is at the 93 area, and an aggressive entry, trying to get greedy, you could say, would be down at the 38.2% of $81. But I like the look of the 50, so yeah, around $87 here because there was previous highs at this point. So let's add that buy area in here. We want to buy REI at around $87. Again, for the stops, we're going to place the stops somewhere below the previous lows. That is this point here, and that is around $76, or the major low, which is around $62. Again, these stocks are quite volatile, so you could lose a huge percentage of your initial capital if you were to place them that low. So that's going to have to be a call for you and how you set up your plan when it comes to investing into these stocks, whether it's for the short term or the long term. If you don't mind for the long term and you're happy to see a stock fall from $87 through $62, being whatever that is, 25, 30%, then that's something you're just going to have to live with and know that you are holding this for the long term. A take profit area for this, again, that's going to be something that's going to be set into your plan. Like I said, with the first stock of Zip, you might look for a multiple of your entry price, or you might look for a time-based period, what happens in 3 years, and then assess it from there. Let's move on to stock number 3, and that's EML. Let's do the same thing for EML, and you can see a grind line here that absolutely broke down after the high, and that would be a perfect sell signal to get out of this stock as it broke through $5. Let's use the same tool on the way up, anchoring it to our low here in March, one of the lows, basically the same, and then hitting up one of these other lows around late March, or was it mid-April? And you can see here that it has broken through, tested it, so it's come back to try and test this area, fallen away again, and produced a lower low and a lower high so far. Let's use the same tool again. You can see how easy this process is to continue to repeat when you know what the tools actually do. So we're just going to use the Fibonacci tool again, anchor it to the low, anchor it to the high. And again, these figures line up beautifully with the 50% level. There's 50%, all old highs. 50% out here is around $2.70, $2.80. So we could see EML come back and test 50%. It's already tested 61% and produced a lower high. We would wait and see on this. Maybe a better entry would be at around 61%. Otherwise, 50% is probably where we would be looking. So those areas for EML, buy area around $2.70. I would then still place the stop losses at a previous lows. So that's around $2.10. And again, do we look for a multiple or do we give it a time-based exit point to take profit? That's our 3 stocks for July. Let's keep them on our watch list now that we've got buy areas to keep track of. We can also set those buy orders in whichever platform we are using, whatever broker, Aussie broker we're using, and just keep them there for when that time comes up. Set an alert in our phones to know when that price has been hit so we can come back and just check on that investment. Now, I put all these videos together because I want to help you grow and maintain a successful portfolio through educational videos like this. I base it a lot around technical analysis, and I look elsewhere for fundamental analysis. If you love the sound of that and you found this useful, consider giving the video a like and subscribing down below. Plenty more videos like this coming out in terms of Australian stocks and cryptocurrency. I think these are great tools to add into our portfolio and begin to build our passive investment fund so that we can get out of whatever it is we're doing if we don't like it, whether it's a job, a 9-to-5 grind, or we just really love what we do, but we also love building a portfolio. That's basically been my journey to this point. You can check it out on my channel over the last several years where I had grown my income and been able to travel overseas for a period of time doing the things that I love to do, which seems to be eating and exercising. What stocks or cryptocurrencies you want to see in future videos. Leave a comment down below for those. I will catch you guys in the next video. You can keep in contact with me on Facebook and Instagram and TikTok. Links are down below in the description. Catch you guys in the next video. Appreciate it. Until then, have more fun to get more done.